Talisker Resources, we're a gold explorer focused in exploration and development of our projects in South Central British Columbia. We're focused on the Bralorne project, which is our flagship. This year we recently completed our maiden or inaugural resource there, 1.7 million ounces at 6.4 grams per tonne, and a small component of that in indicated category, 33,000 ounces at nearly 9 grams per tonne. So one of the highest grade new resources to come out in Canada this year. The Bralorne Gold Project is really the iconic gold project in British Columbia and in Western Canada in general. It still holds the position as the top producer in Western Canada. It is a historic gold project produced for over 40 years throughout the entire gold standard period, something very rare. Total of 4.2 million ounces produced from hard rock sources at an incredible grade, 17.7 grams per tonne. Prior to that, it was the main source of the alluvials that fed the Fraser River gold rushes that opened up the whole of British Columbia as a province. We acquired the project in 2019, so relatively recently, and we've had a very strong undertaking to prove up resource there. We undertook a massive drill program, 9 drill rigs in action simultaneously, drilled 150,000 metres to come up with that 1.7 million ounce resource. Well, really we're looking at making an exciting transition. Everyone's aware it's a fairly tough time for gold explorers, and what we're looking to do with a fully permitted project is transition into production. We recently completed our mine plan, which are the first steps or first stages in transitioning from an explorer into a producer. The first stages of those are being able to slash out some of the historic workings. The portal, we're increasing that to a 4 metre by 4 metre dimension, and the decline into where our first production stopes will be, also slashing that out to 4 metres by 4 metres to be able to increase very quickly our production rate and move to a cash generating position. Really, we've completed our large-scale drill projects. The way the market is, we don't see much point in continuing to drill off the project, even though we see a great amount of upside related to this project based on our knowledge from historic drilling and based on the drilling that we've done as well. We see a pathway to doubling or tripling the resource that we have. However, at this stage, what we're focused on is resource conversion. So conversion in our first 2 to 3 years into indicated category, so then we can build that into our new mine plan. Really the first things we're looking at is, first step was updating our mine plan. And really we're permitted at this stage for small scale production, about 100 tonnes per day. So we need to submit a new mine plan to be able to amend our permit and increase that up to 300 or 500 tonnes per day. The next thing is access, being able to increase some of the historic access there to allow bigger equipment to come in so we can increase our rate. Our initial target was starting off at 100 tonnes per day, waiting till we get everything organised, know what we're doing very well, transition to 300 tonnes per day, then 500, and then finally get up to 700 tonnes per day over the course of the next couple of years. So we're in the first stage of this. The next 3 or 4 months is very exciting for us, doing this initial access development that will give us development to our stopes. We're looking at long hole production, so development along the veins that we're going to be moving into production. And then as we get to Q1 and Q2 next year, so very soon, we'll be looking at our first test production stopes in that area. Well, as we all know, it's been fairly challenging in the equity market, so we look to run a process to sell some royalty on the project to gain access to the capital that we require to transition into production. Our CapEx requirement's actually quite low, simply because we're looking at an off-site milling scenario. So trucking to one of several off-site facilities and processing that away from the project. Long term, of course, we'll look to bring that home and process it at home after a few years, but we want to get cash flow, mining sorted out, and then look to be able to fund as much of that CapEx internally as we can. The royalty financing is really one of the main steps or key funding scenarios behind us being able to transition to production. We ran a process with a significant number of royalty holders. The winner, if you like, of the process was Sprott Streaming and Royalty, and it was quite a flexible deal that we were able to negotiate there. It allows us to do multiple draws, so we've got 4 draws across the course of the agreement. The first draw we've already taken in June this year. That was about $7 million US for about a 1.1% royalty. We are looking at, towards the end of this year, taking the second draw of the royalty, and that'll be through $11,750,000 US, so a total of $18,750,000 US, and that'll be for a bit under 2%, or 1.9%. There are another 2 draws that at this stage we're using as backup optionality. They're $6.5 million US for 1% each. And at the moment, we're keeping them in reserve for when potentially we require them. One of the great things we were able to negotiate with our funding partner, Sprott, were buyback and capping optionality. So we're able to take a higher royalty and get higher capital to get the mine out into production. But then we've got a 5-year period to buy back 50% of that royalty. And then we have a cap on production. When we surpass 1.5 million ounces, the royalty reduces another 50% without any further cost to us. So it's very flexible, allows us to access that capital early on in the project when it's required, but doesn't harm the long-term viability of the project because we can remove those royalties and reduce them back to a more manageable level. The main, I think, benefit that we have is having a fully permitted project. We've actually got 2 fully permitted projects, but our flagship, Bralorne, has a major mines permit, has discharge permits, water treatment plants, and a lot of infrastructure. So we're already connected to grid power. We've got a major highway, or a significant highway, right to the front gate. We've got a camp already built. So a lot of the things that you have to go through in the early stages, we've already surpassed. We already have a very good agreement with our First Nation partners and stakeholders, an exploration agreement. We're just transitioning that to a bridging agreement. So many of the checklists that you have to get through, we've already passed. And we have that optionality in a very tough market space to transition into production and move to a cash flow position, so we can start to become at least partially self-funding. Well, look, it's a real challenging issue and something that's been long-term associated with the mining industry. This is my 4th downturn, so to speak, and we always see a mass exodus of talent leaving the industry, either because they can't find work, or because the work that is available doesn't give them the conditions or the returns that they're really looking for, particularly security-based, giving people the financial security that they need with their jobs. And we've seen that over time. I'm from the BRIEX era, and I think there's very few of my era that are still within the industry. And we're really seeing a polarization, a lot of the talent moving up, moving into management, moving out of technical roles. And really we're losing the middle of the pack that should be there to mentor and develop the younger groups. We also see a loss of mentor programs or development programs in major companies. And really that's something that used to be fundamental to building knowledge bases, giving people access to projects, which is really what people need to learn. They need to see more rocks. So it's a really challenging thing, and I don't know whether I've got the best answers to be able to solve it. But I think we need to take a long-term approach to the industry, and understanding that it's 20 or 30 years of knowledge accumulation that makes a geologist effective and gives them the ability to make very good technical decisions in a knowledge-based industry. So really we need to make that long-term commitment to keep people engaged, and also more flexibility in their roles to be able to keep them in the industry, particularly women, allow them to go and build families and develop roles and still remain within the industry and keep that knowledge base, so we don't get to the point where we lose all that knowledge and we can't discover more deposits. Really, it's about transition to production and high grade, high margin, low capex projects. Really, that's what we're selling here, a project that can transition out of the exploration doldrums into production and very quickly over the next couple of years move to a cash flow position.